Hello everyone, welcome to our Egyptian online seminar group. Before we begin, please keep your microphones muted throughout the presentations. If you have any questions, we kindly ask you to save them until the end of the session, when there will be an opportunity for discussion with our speaker. It's my pleasure to welcome our great speakers, Professor Carmen Olson, Dr. Khawaja Nouid, دكتور يارا طلعت الحروني مستر توريجي فينجن سويندي مستر سيلفيا سوريانو and Professor Rasha Abdulaziz. We are delighted to have you with us today. Now it's my honor to invite Professor Carmen Olson to begin the seminar.
Good
Professor,
morning, good afternoon, and good evening, depending on where you are. It's really very exciting for us to be here today and see so many of you joining. I am Carmen Olsen, and I am the editor of the book, the Routledge Book, Artificial Intelligence in Sustainability, Accounting and Assurance. And it is in Routledge Studies in Accounting, and we are very thrilled to be invited to your Egyptian online seminars, Mohammed, today. This book, in many ways, is aimed to accounting and auditing and sustainability accounting researchers, and provide the conceptual in a way, conceptual and theoretical exploration of the influence of AI in the field of sustainability accounting and assurance. Just let me go ahead. I just want also please to note that we have a related special issue in the Military Accountancy Research Journal, and it has a deadline for submission of papers by 1st December 2026. So hopefully you will find also today's presentation very useful for you guys for contributing with papers to this call. So in many ways, this book and our work with other 13 authors have inspired also that we start with one of the authors in the book and another researcher in Australia, this call for papers, empirical ones specifically, or other types of papers more generally, to this ABS journal. So this is really a great opportunity for all of us, for our research community. A brief overview of today, like Mohammed have introduced, I will just present a small overview here of the book, and then I will also ask all my good colleagues and professors that contributed in the book to present their chapters, and they have about 10 minutes. And Dr. Huwaya will be taking care of and giving you a bit of a head up if you are running over time, perhaps telling you there is about 2 minutes or something. So we will allow for time, of course, but we try also to keep it dynamic and fast. So about this book, of course, it has been the idea has been around for a while, especially when AI hit our research community, and we saw that we should have some a work that stand up and provide the basis for researcher to go ahead and do research on AI, blending AI into our sustainability accounting and assurance type of research. And that's why this idea of the book come about, and what is original about it, it's also in a way bridging both sustainability accounting and assurance together and bringing in the AI impact. So as I said, we are all 14 authors that have been writing together here several different chapters, and we are coming from university and institution across Europe, South America, Africa, and Asia, as you will see later on when our good colleagues will present themselves. And they bring together really a fantastic and diverse range of expertise into the topic of the book. The book consists of 9 chapters. 7 are the chapters written about the topic. One is another chapter is an introduction, and in addition there is a conclusion chapter that wraps all the ideas in the end. There are 3 parts in the chapter. Of course, we have thought about there is AI in sustainability accounting as one part, and a second part, AI in sustainability assurance, and you may find some, of course, chapters where there is both sustainability accounting and assurance, especially in the second part, and then we go on to a more futuristic view of sustainability accounting and assurance in the era of AI that we, in a way, push a bit further than what conventionally we would expect perhaps AI would do. So this is also very interesting for future research. All chapters, how you can use them as an inspiration, and they inspire for future research based on prior research, of course. So it's a tremendous amount of work in this book. As you see, we will go ahead afterwards. The second chapter, that is the first chapter of the introduction, is I am the author. And then we will have a chapter presented by Huaya, and then, as you see, there is Yara and Sylvia and me again for another co-author chapter, and then Toya. And we end up with Russia chapter 8. In the end, as Muhammad said, we have, hopefully we will be around 11, and we will have a discussion and open for question. And guys, you can think about it as your comments, wherever that you are wondering about. So please ask questions. This is very helpful, or whether also you have question how you can go ahead with your ideas. As we have also PhD students, you are welcome to ask these questions in the end, and we'll see what we can do. We will. Our plan is to end at 11:30 anyway. So if we end before, but this is no. We will just allow to 11:30. Hopefully, we will have good questions there. So I will just go ahead and try to go over to my second chapter. So just a minute. So now let's move on to chapter 2. Here you go. Chapter 2 is also by me. It's taking a point of departure in some work I have been doing since 2021 when sustainability accounting became regulatory in Europe, and I have been trying to transport in ways accounting pillars into the sustainability accounting domain. As you see upwards in the yellow, the yellow figure, this is what I have been working since on, and this is a continuation on that, integrating AI more into the this framework. It's also called now, this framework is called Conceptual Framework for Intelligent Reporting and Sustainability, and it's nicely got an acronym CFIRES, which works well, and we can remember it. About my, sorry, it's going forth and back. About my background, I'm an associate professor of accounting, tax, and business here in Norway in two universities. One is the Western Norway University of Applied Sciences. This is in beautiful Bergen that you are looking at it behind me. If there are some issues with words, this is because there is something with the mirroring. But this is a beautiful city, and on the western side, and the other university is on the other side of Norway. It's called Inland Norway University. So we'll go through very fast the problem, background, pillars of reporting, and then benefits and risk of AI. The main contribution of this chapter, CFIRES, is the conceptual framework, including AI in it, and it's very useful for both profession and teaching. And it has been, although I am the editor and the author of this chapter, it has been actually also reviewed by two other reviewers. So the problem in this chapter that we are trying to resolve is that, of course, given the AI now, it's clear that when you use AI in accounting and sustainability accounting, it's very useful in many ways, but also there are consequences. And one of the consequences that are known by the use of AI in sustainability accounting, there is a higher risk of bias, greenwashing in reports, and reputational risk and litigation for Big Four firms. And this is one of the picture here showing that Deloitte had used AI and in some reports for the Canadian government, and had some trouble because AI had included some fake citations and so on. So it's really a problem, and it can cost our community a lot of hassle. We want also to point that AI, and probably many of the authors will do that, is generally understood as a technology that mimics human intelligence, and it's also a part of all this automation environment and landscape that is like robotic process automation, RPA, and all other technologies that have with machine learning, language models, and so on. Sustainability reporting is defined in many, many ways. The oldest, one of the old ones is it's an organization's practice of reporting publicly on its most significant ESG impacts, and hence its contribution, either positive or negative, towards the goal of sustainability, sustainable development. We will not go through all the points in the slides, but there is a lot of research also on that we need more on AI in accounting and sustainability accounting specifically, and there are also some research showing that AI may increase greenwashing risks in sustainability accounting, as organizations may use it to make disclosures. There is also a lot of work now done in AI in financial accounting and auditing, and it's pointing to potential and significant risks. And we, of course, see in the textbooks also there is a lack of the integration of AI knowledge in our framework, and theoretical literature shows no, in a way, integration on AI. Clearly, we speak also about that now we are moving into intelligent reporting using AI and advanced digital tools. This has been around for a while to collect, analyze, and communicate sustainability information. And outputs may include from this work with integration of intelligent reporting in the practice of sustainability reports. Output may include real-time dashboard, automated analysis, and decision support insights, which is very good. That's why perhaps the main research question here is how can intelligent report be embedded in sustainability reported? And of course, as I said initially, this will enhance our knowledge both on education and in professional practice. There is a lot we could say about that with the benefits and risks of AI for sustainability accounting and reporting based on the existing literature, and why we should really look at it as an important thing to include in our framework and understanding of sustainability reporting. We know that there are efficiency gains, real-time reporting, improved auditability, enhanced compliance, which reduces the risk of penalties and litigation. Whatever regime we are speaking about, here we are showing the CSRD, that is the European one, but this is not dependent of the sustainability reporting regime. And then we have also other positive sides and benefits of using AI in sustainability reporting. There are a lot of risks also using intelligent reporting in sustainability accounting. This is like, for instance, illusion of objectivity. And I'm just looking if I have no, I don't have a specific one on that, but this is the idea that actually all the metrics we are using in data, sustainability accounting data, is infused with socially constructed and metrics, and also the AI and language models are in a way providing this. They are biased with that. So it's not so objective to work with AI in sustainability accounting, and there is a lot on that in the chapter. There is also the risk of greenwashing. So some of the research is saying that you may use AI in this in writing, especially the narrative disclosure, but this may also give you too positive language in the disclosure that may also embed bias, which may lead to greenwashing. So there is a lot of knowledge on that. There is also the interesting problem of over-reliance on AI, that we, as we rely more and more on AI, I see Huaya, I will wrap. So that's why this is also an interesting risk to look at, and to include in our main framework that has been the departure. As I said, in 2025, I had this framework where that is sustainability reporting is based on a business understanding, regulation and standards, applicable one, and internal control over sustainability reporting, also on digital system. And what we add now with coming AI is that we call that more of an intelligent reporting and intelligent systems in this part, and that every pillar is actually either influencing or influenced by AI to produce in the end sustainability reporting. You can read more on that in the chapter, and is becoming therefore CFIRE a directional version of the framework that I have been working on earlier. So thank you so much for your attention, and we move on to chapter 3.
Please unshare your slides. Yeah. So,
Why, this is yours? Okay.
okay. So I'm Khwaja Naveed. I'm a postdoc researcher at University of Gothenburg. My work is focused on sustainability accounting and reporting, and it's increasingly converged towards the use of digital tools towards the its application on sustainability reporting. The project we were working on was about institutionalization of digital tools in sustainability accounting, and there we observed that first we need to have an understanding of state of the art of the field, and therefore we conducted the study of the systematic literature review to have an understanding, because previously when sustainability accounting in itself was introduced, the institutionalization was not as it happens traditionally. There were some nuances attached to the institutionalization of sustainability accounting in its own. And when it comes to digital tools, then it becomes more complex, and we need to have an understanding of institutionalization. So this study is a first part of that project, and we will move forward to have further understanding of this institutionalization process and further studies on that. So this chapter is important because sustainability is now strategic, and digitalization is all out there, as Carmen has already mentioned out there. So only adoption is not enough, because institutionalization is a process which happens anyway, and when it's not thoughtful, it have inherently those kind of complexities which can exacerbate the process, and there are a lot of paradoxes attached to the management of that process. So they can improve, these digital tools can improve transparency and efficiency, but they may amplify bias, and they may instill exclusion. There's a lot of cyber risk attached to that, and as we know about greenwashing, so there is the chances of algorithmic greenwashing out there. So this study, we have a main claim that the value of digital tools, it depends on whether they are embedded to organization into organizational routines, professional judgment, and governance, or if they are let by its own to lead its own pathway, and that's a very big scary thing. So in the study, we have a Prisma process out there, and then we complemented that process with our own snowballing and analytical selection of certain studies, and come up with the 141 studies. Our aim was to explain how digital tools become institutionalized in sustainability accounting, and how this shapes performance, accountability, and strategic value. So we have this clusters of our literature, and these three clusters, it constitutes data intelligence and insights, which include the use of AI and big data analytics in Internet of Things. Then we have the second cluster kind of team, which is trust and verification infrastructure, and it involves blockchain and those kind of language architecture of the type of XBRL. So there the focus is on immutable audit trails and machine readable disclosures and comparability and assurance things. And then we have the third cluster, which is about connectivity and engagement problem platforms. And here the focus is on the digital tools of the like of clouds, dashboards, and portals. And here the scalable reporting systems and participatory stakeholder communication, it happens and it matters a lot. So the shift is from manual fragmented reporting to continuous, integrated, and verifiable sustainability accounting. So how this process happens? So we have three kind of institutional pressures which happens. The one is in terms of regulations and standards known as coercive pressures, and the other one is in terms of competitive imitation known as mimetic pressures, and then in terms of professional stakeholder norms known as normative pressures. And it has a differentiated kind of impact on different themes which we have observed in our studies. So in terms of institutionalization, these tools become legitimate, routine, and governed and professionally meaningful. So these are the things which are there apparent in our literature review. So there comes our digital sustainability paradox, whereby on the one side we have the enablers, and on the other side we have those barriers. So there is a kind of trade-off anytime between these two, and the institutionalization process, it is like impacted by these enablers and barriers. So we have regulatory mandates and digital reporting standards as enablers. We have technology maturity and cloud scalability as enablers. We have professional upskilling and cross-functional collaboration as enablers. And then we have stakeholder demand for verifiable ESG information as enabler of this process. And then we have barriers in the shape of skill gaps and role conflict among accountants, legacy systems and poor interoperability, then cyber security, data governance and privacy risks, and then small and medium enterprise exclusion, algorithmic bias, and greenwashing risks. So this paradox, it does not mean that more data means automatically better accountability, but institutionalization, it needs to be instilled out there so that a digital tool are complemented by human judgment, governance, and inclusive access. Wrapping up it, our theoretical contribution is to extend institutional theory to explain how digital tools become embedded, legitimized, and normalized in sustainability accounting, and practically to show to managers and accountants where to invest, either in data capability, either in system integration, or governance, or assurance, or upskilling. All those are relevant, but relevant in different clusters in differentiated ways. So how to prioritize in each theme. And then we call for harmonized digital reporting standards that enable comparability while protecting data integrity and access, which is call of the day. So digital sustainability accounting succeeds when technology is institutionalized as a socio-technical system, which means that it needs to be efficient, it needs to be verifiable, it needs to be ethical, and it needs to be inclusive. Thank you.
Thank you so much, Huwaya. I believe that is Yara. Yes.
Good morning, everyone. My name is Dr. Yara Al-Harouni, an accounting assistant professor at MIU with a passion for connecting traditional accounting and finance with the transformative power of AI. And today, I'm pleased to present Chapter 4, titled Artificial Intelligence for Corporate Financial Sustainability Prediction, a literature review. This chapter was co-authored by myself and Professor Hassan Aouda, Professor of Accounting at the GUC, who is the author of two important books. One of them is related to long-term financial sustainability accounting and reporting in public sector. Professor Hassan was also the supervisor of my PhD and master research, which were successfully completed in the area of integrating AI with accounting and finance and obtained from the GUC. This chapter mainly proposes a comprehensive definition of corporate financial sustainability. It also explores how AI can help companies predict their long-term financial sustainability by integrating different data types. In addition, it identifies key directions for future research. With that introduction, I will begin by discussing the motivation behind this chapter. Over the last decade, sustainability has become one of the most important concerns for organizations worldwide. Companies are no longer evaluated only on short-term profitability, but also on their ability to survive and create value in the long run. At the same time, organizations operate in highly uncertain environments that are characterized by economic crisis, inflation, technological disruption, and changing in customers' expectations. Financial forecasting plays a critical role in reducing uncertainty and improve decision-making. Accurate forecasts mainly help organizations anticipate market trends, manage risk, and develop more effective long-term plans. When reviewing the literature, we found two major problems. First, despite decades of research, there is still no universal accepted definition of corporate financial sustainability. Different researchers focus on different aspects such as profitability, liquidity, solvency, or growth. Second, research examining AI application in sustainability prediction is fragmented across accounting, finance, economics, and computer science. Therefore, this chapter has two main objectives. First, to develop a comprehensive working definition of corporate financial sustainability. And second, to explore how AI can transfer sustainability prediction using multidimensional data while outlining a roadmap for future research. One of the main contributions of this chapter is the development of a comprehensive definition of corporate financial sustainability. Based on the literature, we defined corporate financial sustainability as a corporation's ability to manage financial resources effectively in order to ensure long-term operational continuity. This includes generating sufficient revenue, meeting financial obligations, supporting growth, and adapting to market changes without compromising future viability. It also involves maintaining productive capacity aligned with strategic goals and customer needs, including dimensions such as liquidity, solvency, profitability, and resilience. Predicting financial sustainability is challenging because it depends on multiple internal and external factors that interact and evolve over time. As a result, forecasting corporate financial sustainability requires analytical approaches that are able of dealing with complexity, uncertainty, and dynamic relationships. Given the complexity of corporate financial sustainability, traditional forecasting methods often rely on historical financial data and assume relatively stable relationships among variables. On the other hand, AI overcomes these limitations by identifying hidden patterns, modeling nonlinear relationships, and learning from new information. The literature demonstrates a clear evolution in AI applications. Early studies focused primarily on machine learning techniques such as support vector machine and random forest for prediction purposes. More recent research has increasingly incorporated natural language processing, enabled the analysis of annual reports, CEO communications, financial news, and social media content. At the frontier of this evolution is deep learning, which uses advanced neural architectures that are able of covering complex patterns that may not be observable through traditional analytical methods. Together, these technologies have expanded the scope of financial forecasting beyond numerical data alone. The first stream of literature reviewed in this chapter focuses on financial information. Financial ratios remain the foundation of most prediction models because they capture a firm's operational efficiency, profitability, liquidity position, and solvency. However, the literature showed that the major innovation is not the indicators themselves, but the analytical techniques used to process them. Across multiple studies, AI models consistently demonstrated superior predictive performance compared with traditional statistical methods, particularly when forecasting financial distress and long-term financial sustainability and financial performance. One of the most significant developments identified in the literature is the growing use of textual data. Researchers increasingly recognize that corporate communication contain valuable information that is not captured in traditional financial statements. Through sentiment analysis and natural language processing, studies have demonstrated that the tone of annual reports, CEO letters, and financial news can provide early signals regarding future corporate sustainability and corporate performance. This suggests that the language itself has become a strategic source of predictive intelligence. The third major stream of research highlights that the importance of using macroeconomic conditions and indicators in order to predict financial sustainability. Corporate financial sustainability and performance don't occur in isolation. Firms operate within a broader economic environment that shapes opportunities and risk. Studies reviewed in this chapter show that variables such as GDP growth, inflation, interest rate, and exchange rate can significantly affect financial sustainability outcomes. Therefore, integrating macroeconomic indicators into AI-based forecasting models often improve predictive performance. Accordingly, rather than viewing financial sustainability through a single lens, the chapter argues that accurate forecasting requires the integration of three complementary sources of information and data, which are financial data, tactual data, and macroeconomic indicators. As for future research should focus on developing an integrated AI forecasting framework that combines financial, tactual, and macroeconomic data, incorporate firm-specific variables, and validate sustainability measures across different contexts. Also, they should develop an industry and region-specific models using real-time data and address ethical issues such as transparency and algorithm bias. This concludes the summary of Chapter 4. I would like now to hand over to my colleague who will continue with the next chapter. Thank you.
So thank you so much, Yara. Sylvia is coming with her, yeah.
One moment. Okay, now I think you can see my slides.
Yes, perfect.
Yes. Okay, so good morning. I'm Silvia Soriano. I just finished my PhD last April at the University of Roma Tre, and I will present the chapter on artificial intelligence and the transformation of sustainability accounting and assurance. The other authors are Professor Mercedes Luque-Vilchez, Professor Luis Griffiths, and Dr. Luis Pereira Aldama. So the main research question of the chapter is linked on how artificial intelligence is reconfiguring the enables and barriers of sustainability accounting and assurance. We offer 4 contributions. The first one is the identification of AI as a transformative force. And the second one is linked to the identification of 5 conceptual drivers. So the mechanism that explains how AI is and will reconfiguring and altering the foundation of sustainability accounting and assurance. Then we identify a paradigm shift in sustainability accounting and some critical research gaps for in terms of user. Considering the methodological stance, we presented a structured review of academic and regulatory literature combined with a practitioner perspective, considering the 14 plus years of professional experience in sustainability accounting and assurance of one of the authors, Luis Pereira Aldama. So the idea was to update the paper of Paul Griffith and Luis Pereira Aldama 2007 in order to reframe the main research question and to update it considering the AI era. The regulatory context is mainly linked to the European context, so the consideration of Corporate Sustainability Reporting Directive, that is the European regulation that introduced in a mandatory way the sustainability reporting standards, and that is characterized by the introduction of double materiality assessment as a backbone. And then we have the AI Act, that is a risk-based framework of rules for AI developers and deployers in order to reach trustworthy, lawful, and ethical use of AI with the collateral compliance and trust governance tools that were developed. And we will see what kind of change will be generated by the new simplified requirements of the omnibus packages. But the core idea is that the AI and the digitalization of internal processes of the company is not an option anymore, but is required for compliance and for competitiveness of the companies. As we saw also in the other chapters, sustainability in considering the state of the art, AI represent an opportunity, considering also the relation with sustainability accounting in terms of automation, data mapping, predictive analytics, to improve the traceability of blockchain and the use of blockchain for supply chains. But we have to consider the fact that there are also some shadows, some challenges and risk linked to the possible breaches of data privacy and securities, but also the risk of technological tokenism, in which AI is more used for appearance rather than a real impact. We underline also the presence of a research gap, so the lack of systematic studies on AI for double materiality assessment, that, as I said, is one of the backbone of the new European directive. Considering the sustainability assurance and the relation with the use of AI, the research are limited but are growing. Is to use AI in order to enhance credibility, authenticity of to the risk of the reduction of human oversight and critical auditing capacity, and some ethical concerns linked to the loss of human judgment and replication of biases. As I said, the chapter and the study is focused on how AI is altering the foundation of sustainability accounting and assurance. We underline the presence of 5 conceptual drivers. The first one is the idea that AI is not only a tool, but is a socio-technical system. So the use of a hybrid human AI decision-making model will require strong ethical corporate culture. Then we have conceptual drivers linked to integration and accuracies in terms of using AI for embedding sustainability data collection in the core of management systems, and also automating data collection in order to be compliant with different kind of standards, sustainability standards. And then we have the conceptual drivers linked to mitigation of information asymmetries and traceability of information that will be really helpful for SMEs and for reaching transparencies using, for example, blockchain that is required by a double materiality approach. Just a few words on these. The different kind of conceptual drivers would impact in different way on sustainability accounting and assurance. In terms of accounting, the main impact will be linked to integration and automation of data. In terms of assurance, would be more epistemic, more disruptive in terms of also change the work of auditors in identifying consistencies, in verifying the authenticity of the sustainability information. Why these conceptual drivers are so important? In order to understand this, we, as I said, revisit the paper of Griffin and Perel-Damo 2007. The idea was to reread the 6 topics presented in the paper in order to understand what has changed and what has not. The problem of translate the principle into management processes and organizational processes remains. What has changed is the context. So there was a shift from an information push era to an information pool. So the idea that before was the presence of a static report from companies, and now is a more dynamic approach from the different stakeholders. And this, the real change and the real force that pushed this shift was the AI, and this is visible across the different topics in the chapter. And then we analyzed the paradigm shift, so unlikely traditional financial accounting and traditional managerial accounting, the sustainability one combines external accountability and internal decision-making, a manageable scale without the support of current and future AI tools. So the AI enables could enable also the real-time KPI integration into performance and reward systems, but at the same time, there are some barriers in terms of ethical and cultural problems, but also technical complexities, interdisciplinary skill gap. Just to wrap up, the open question that will be an open research and also a governance challenge is that how we can consider sustainable the use of high consumption energy AI infrastructure in order to enhance the reporting on environmental impact. And this will change, we think, also the business model of accounting and assurance profession. To conclude, the main idea is that AI is not only a tool, but is a governance force. The priority research gaps that we identify are linked to the idea to search on the methodology for AI-assisted double materiality assessment, ethical and accountable AI governance models for sustainability assurance. And we have to understand that the challenge of getting things done in sustainability persists, but its resolution will depend on our ability to manage this intelligent system in an ethical and efficacy way. So thank you for your attention.
Thank you so much, Sylvia. So we move into more of the assurance domain from Sylvia's chapter on sustainability, accounting, and assurance. We move more into the sustainability assurance in the AI-driven era. And more precisely, we look into one of the cornerstone and foundational attitudes that auditors has to have is professional skepticism. That is very important in an AI-driven engagement environment. So this chapter 6, I have written myself with my colleague at the Norway Inland Norway University, Hans Roger Granerud. He's also a CPA in Norway. We have the following overview is a background. What is professional skepticism? A reminder on that and how it's defined in the assurance standards, and why professional skepticism, or PS, as it is an abbreviation in the literature for professional skepticism, it's challenging in sustainability reporting and AI setting or AI enhanced audit engagement settings. And we are also identifying key issues in this current environment and providing a research agenda and conclusion on this matter. Defining professional skepticism, we went through the audit and the sustainability assurance standards, and we looked through those to see how the professional skepticism concept is defined, and it shares similar definitions. That is an attitude with a questioning mind, alertness to possible misstatement due to error or fraud, and critical assessment of the evidence. This is professional skepticism among auditors is a core practice, and the main idea behind being professionally skeptical in an audit engagement is challenging inconsistent evidence and evaluating inquiry reliability and assess sufficiency and appropriateness of the evidence delivered by the client or audit client engagement. Professional skepticism is much more than just also a requirement in the assurance standards. It is also in our literature, in auditing literature, known as a treat versus a state skepticism. That is also in part a personal disposition and also influenced by the situational context of the audit in the audit engagement. So it is also now has to be practiced by the auditors in an enhanced AI audit setting or digital setting, digital regulatory context of, for instance, the European one, which is the CSRD and the ESRS standard accounting standards, and also the taxonomy. So we see, for instance, that the CSRD and ESRS have a strong digital context, such as the sustainability disclosures are in fact also enhanced with digital data points up to 1,000 and something. And it's increasing. It depends on what material matters are reported by the audit client. Also, it is sure that the EU taxonomy also is delivering different enhanced digital tools to enhance transparency and curb greenwashing in the same time and enhance comparability. Other also digital regulatory context elements is a data format for reporting that some of my colleagues like Waya have been mentioning, XBRL and so on. Among the issues that we pin down for future research is a clear problem of data quality and completeness. As we know, sustainability data often relies on estimate third-party data and probabilistic models, and the fragmentation and incomplete data set complicates sufficiency and reliability of this data, sustainability data, and clearly from an audit and professional skepticism perspective, it is important to interrogate the data sources and methods and assumptions and completeness, and this would be a point that future research could look into. Another issue that we see with regulation and standards in assurance is a problem coming from the ESRS, for instance, standards with materiality and subjectivity in the disclosure, such as the ESRS disclosure entail extensive judgment and forward-looking disclosures, and clearly heightened professional skepticism is needed for scrutinizing management judgments and materiality, and there are significant estimates and decisions based on judgment and materiality, and probably there are also possibility for omissions. So the risk here is perhaps how the auditor will look into that, that there are possibilities for omitting unfavorable or hard to obtain information that is nevertheless material to user of the sustainability reports. Issue number 3 that we see that we identify as greenwashing and legal exposure. Assurance in the literature that we have reviewed can be symbolic if it legitimizes disclosure without depth, that is a verification exercise. Post-assurance scandals raise question on the AI age auditors, how they will be held legally or reputationally accountable for the assurance services, as this is the case in the current standards, although they use extensively AI going on. There are persistent CSR performance decoupling literature that we have been looking into, even in assured reports, suggesting gaps in critical scrutiny and professional skepticism when met with the use of AI. Issue number 4, and it is the assurance scope and the role of AI. Today, we have limited assurance in the assurance reports, while in auditing, we can go up to reasonable assurance. And this means that limited assurance is fewer procedure reliance on analytics and inquiries and lower cost, but potential professional skepticism dilution in our opinion. AI tools can enhance detection of inconsistencies and broaden evidence, but also complicate the maintenance of skepticism. So there is a tension here. And then the fifth and last issue that we point out is the relevance and effectiveness of assurance. Assurance is positioned as a value-adding exercise, but risks becoming reputational or procedural if professional skepticism is used shallowly or exercised shallowly. A key question here would be like how assurance meaningfully reduce misinterpretation and greenwashing risk in the age of AI. Research agenda and takeaway example of a big question here was on how AI improves professional skepticism and assurance quality, especially under limited assurance regimes. That is the current regime after the omnibus. This is a very important question we are raising in our chapter. And I will wrap here that we see a need for recalibration of professional skepticism under limited assurance regime to compensate the effects of AI on sustainability reporting. Use of AI can be very good to augment, not replace, skeptical inquiry of auditors and validate anomalies with corroborative evidence. It is also possible to document rationale thoroughly in the systems of auditors to evidence a critical and unbiased assessment and counter AI's unintended adverse effects on sustainability reporting and assurance. Thank you so much, and please do not hesitate to contact us for any questions.
Okay, next story.
All right. Yes, I'm here. Do you hear me?
Yes.
Yeah, good. So I'm going to talk about the chapter 7, the problem of data integrity in sustainability accounting and assurance, co-authored together with Carmen. So briefly about my background, I have a degree in accounting and auditing, and also worked a couple of years in accounting, including in KPMG. So I got to see the real how auditors work when verifying these assertions in the financial statements. It is a very tedious job, which makes the technology of triple entry accounting and blockchain very interesting, because you can make a lot of automations and increase the quality of this reporting. Now, when I say accounting, I refer to both financial accounting and also sustainability accounting, because at the end of the day, it is about counting and reporting the findings. Now, I want to start with why this is important. If you look at some accounting history, you see that a civilization that prosper is taking accounting seriously. This is from a book, it's called The Reckoning, from Jacob Soll. I can recommend that book. it is a lesson that is true today, and it was true hundreds of years ago. And with this technology, we can now get more truthful reporting and accounting. I discovered blockchain and triple entry accounting in 2018. So this led me to actually quit my job in KPMG and become multidisciplinary. So I got another degree in information security and computer science. Now, I mention this because it's a multidisciplinary field. So you need to be curious beyond your own field to really see the benefits that you can get from this. So in this case, it's accounting, it can be law, and also information security. Now, in our chapter, I looked at 2 use cases, which is in accounting and in supply chain. So I'll show you the pictures that I've been using in the book. There. Do you see? Yes. So first, what can triple entry accounting solve and not solve? So there are limitations to triple entry accounting. It cannot solve fraud at the origin. So garbage in will still give garbage out. However, you get some accountability, some more accountability in the triple entry accounting technology. So what is triple entry accounting? The name can be derived from basically a third entry in a shared ledger. So I would say it's a tamper-evident receipt on a public medium, such as a blockchain, that is cryptographically bound to private ledgers of both parties. So what you get is verifiable accounting. If company A and company B are trading, then they can extend their accounting beyond their own private ledgers onto this shared medium, and this can then reconcile. So when an auditor comes along, this is very good audit evidence. It solves 2 weaknesses that we see from traditional accounting, which is that you could have alternative books. So you could have one set of books that you showed only to, let's say, the auditor or the government, and then you can have another set of books that you showed to your creditors, and you can have alternative books, which is the oldest way of doing fraud in accounting. So triple entry accounting solve this by committing to posting these to a shared medium, such as a blockchain. It also makes it verifiable. So you take the leap out of the data silos from these private ledgers onto these shared ledgers. Now, using blockchain as a shared medium is very enabling. It's basically an evidence machine. So in the terms of Bitcoin, a lot of people focus on the price only in Bitcoin. But if you look at the name, it is bit and coin. Now, coin got all the attention, but the interesting part is actually, I would argue, in the bit side of it, because you could store information in the blockchain, also in the Bitcoin blockchain. That is possible. So this is interesting from the audit perspective, because if you can timestamp and store audit evidence in a shared ledger, of course you would want to encrypt it before you store it there, or index it to this public medium. Then you can automate a lot of the auditing that's going on. We actually tested this with the Norwegian Financial Supervisory Authority. Every year they have a fintech sandbox. So we got to participate in 2021, where we showed this concept, and we got the regulatory clarity on, okay, if I'm an auditor and I see this kind of evidence, how can I use it? And we got these uncertainties relating to the ISA 505 and ISA 500 in particular, when using this kind of audit evidence. I think this is a very new and groundbreaking concept to use blockchain in as a part of the audits. I haven't seen it yet, but I'm sure this will be the future, especially in auditing and accounting. The other use case was the supply chain traceability. So basically, what we have here is a digital product passport and a smart digital twin. So you can anchor sustainability data into these passports and on the blockchain. So when the passport travels downstream the supply chain, the different actors that rely on information about the product, they can actually see, okay, this information was signed and timestamped into the blockchain. So it gives the data more integrity, but also then you get a better tracing of the data. What's the origin of this data? Who is asserting this information? And if it turns out that the assertion was not true, then you have recourse. So the whole system incentivize honesty in a sense and better reporting. So I'll stop there. I would say future research on this area of triple entry accounting, data integrity, and blockchain would be efficiency gains of using this kind of system and network effects. So those are two very important things because if you can prove efficiency gains and if you can find out how to make this network effect spread, then you have a very interesting concept because it will depend on that. Further reading, anyone who are interested in what I just talked about should, of course, read the chapter. And I also want to mention Ian Grigg. He termed triple entry accounting back in 2005 before blockchain came along. And Craig Wright. He recently published a paper on triple entry accounting back in March. So I would also recommend you to look at that. And you could just ask me if you want to have a link to that paper. Thank you.
Thank you, Toya.
So you can unshare your screen.
I don't see how I can stop my presentation.
Yeah, the red
Oh, there I see it. Okay, let me see. Oh, there we go. Okay.
So Russia. Share them. Russia. Are you okay?
I'm not sure if she is hearing us. Do you hear?
Yeah, I can. Can you see my presentation?
Yes.
Yeah.
Perfect.
Fine. Go ahead.
All right. Thank you so much for this kind invitation. I'm Rasha Abdelaziz, professor and head of Business Information Systems Department at the Arab Academy for Science, Technology, and Maritime Transport in Alexandria, Egypt. I'm the principal investigator of a number of internationally funded projects and a member of the Permanent Committee for Promoting Professors. I've been in this field and in academia for over 28 years, and I'm happy to present this chapter today. So sustainability reporting is really facing credibility challenge. So stakeholders are now not asking whether companies are actually disclosing or what are they disclosing, but rather deeper questions such as, are these disclosures really reflect the experience on ground? So this is the starting point to our chapter 8, Integrating Citizen Science and AI for Digital Transformation in Sustainability Accounting, authored by myself, Rasha Abdelaziz, and Professor Ahmed Al-Ragel. And the chapter is about moving sustainability accounting from corporate claims to actual credible evidence. And let me take you through our storyline from the problem onto the credible evidence, where we start by reporting the gaps, then the core idea of the presentation, which is the synergy between citizen science and artificial intelligence, then onto the framework, the CAS, how would this work? and then the risks such as bias, privacy, and governance, and finally, the implications. So what we try to say is that sustainability reporting becomes more credible when community evidence and AI analytics are governed together. So why this chapter matters? Sustainability reporting is really under increasing pressure to be transparent, accountable, stakeholder focused. And the problem is that organizations, they often report what they can measure internally, while communities experience impacts externally. So this creates a credibility gap. And the chapter positions sustainability accounting as a socio-technical system where digital tools, institutional practices, and human participation must all work together. So citizen science and artificial intelligence are not separate topics, they are actually complementary. Citizen science brings in the community-generated localized data, which is the evidence, and AI using its technologies such as machine learning and natural language processing can detect anomalies, patterns, and make the appropriate validation. And governance makes the output trustworthy. So citizen science supplies context, AI supplies scale, and governance supplies trust. So citizen science is actually a sustainability data ecosystem. It strengthens the reports by bringing evidence from places companies may not see directly or may not even access. So in order to get this good data, we have to maintain accuracy, reliability, legitimacy, and engagement. So can we do this? Yes. For example, accuracy through training protocols, expert checks, reliability through repeated observations, and even peer validation, and legitimacy through transparency, public access, broad participation, and engagement through stakeholder voice in materiality and assurance. So citizen science is definitely powerful, but power without validation is not evidence at all. So this what brings in artificial intelligence in as a validation and interpretation engine. We're using machine learning, such as applications such as pattern recognition and anomaly detections and data inconsistencies. And using natural language processing, we can extract themes from community narratives, complaints, diaries, and even text reports. And real-time checks links citizen data with scientific databases and formal environmental social governance evidence, and thus improve reliability. But AI is not magic. Its output must still be governed and interpreted by human experts. So now we've discussed the ingredients, let's show how the recipe works. How do we move from community observation to credible environmental social governance disclosure? We start by collecting the data, which is the citizen data, the citizen inputs. Citizens report local environmental or social observations. Then AI detects anomalies, duplicates or inconsistencies, and make the appropriate checks and validation. Then stakeholder concerns inform materiality, and accountants and auditors strengthen the disclosure and assurance and make the appropriate reporting. And finally, feedback improves the next cycle. So the chapter's practical contribution is not just more data in, but a governed reporting cycle linking citizens, AI tools, accountants, auditors, and stakeholders. TCAS framework gives the artificial intelligence and citizen science integration a decision-making structure. It's very important because it doesn't leave AI as a black box. It shows who decides, what evidence is used, what analytics support the decision, and who remains accountable. So it brings in the decision maker, the decision itself, the data, and the analytics used, and the decision-making process. So it's a collaborative rationality. So citizen science contributes the data, AI contributes the analytics, and human experts remain the responsible for the final sustainability judgment. Yes, we know we are optimistic, but we're not naive. There are risks. For example, definitely there could be bias where demographics, for example, may not represent the affected communities, or citizen data can be inconsistent without protocols, and this brings in poor data quality. And the generated claims of AI with all the AI hallucinations can look very credible, but still be false. Models may amplify the underrepresented data, which is an algorithmic bias. Privacy, ownership, and ethical use must be clear in order to have data governance. So how do we mitigate this? No more technology. It's better governance. So the mix would be inclusive participation, standardized and validation protocols, plus transparency, plus accountability. So what does this mean in practice? Companies gain richer evidence, accountants and auditors get stronger assurance, and regulators and standard setters have clearer guidance, and even researchers, they get new research agenda where they can dig deep into validation, ethics, standardization, and engagement strategies. So benefits extend across the entire sustainability reporting ecosystem. So the future challenge in sustainability reporting is not the lack of data. Data is all over the place. The real challenge is credibility. So back to question number 1, how do we know the sustainability disclosures reflect reality? Citizen science gives the voice, AI gives the validation, and DCAS framework can give the accountability, and together they move sustainability reporting from simply corporate claims to actual credible evidence. Thank you.
Thank you, Rasha. We now want to thank all our presenters for their fantastic presentation today of the book chapters, and we move on to the Q&A session. Now, Mohammed, I believe we can perhaps ask the people to just raise their hand if they want, they would like to ask a question or provide a comment. And if not, you can also write the question in the comments. So Mohammed or Fouaya I could probably just ask them. So go ahead.
Thank you very much, dear Professor Carmen, Turgen, Hauga, and Yusra, Sylvia, Rasha. Thank you very much for your contribution and your effort. It's really an excellent presentation, to excellent book. Now, if anyone have any questions, you can open your mic and ask your questions.
Yes, yes.
Muhammad Omran, yes.
Yes. Good morning, everyone here. I am Professor Omran from Xianzai-Tong Liverpool University in China. It is really very interesting and valuable book. However, maybe you explore more about how this kind of AI integration with assurance of ESGs and sustainability will shape our business school student in accounting as they will graduate and they will join like big 4 companies or some professional body. And this is also another challenge. Maybe it deserves to be addressed in the book, but I don't see any chapter speaking about this. So do you have a plan to complete the task with how this will shape accounting education?
Yeah, so thank you, Mohammed. And here I will, of course, invite other researcher with us to provide their opinion on your important question. So for the overall, the book is actually for research. However, we can see that some of the chapters are addressing your question. And among one of those are my chapter 2. So that's why I am speaking. So the chapter 2 is actually very relevant for education because it explains how the quality of sustainability reporting is dependent also on AI. and through a framework that you could actually teach to students. So what we are doing, I am doing with this chapter is I am using it in courses, master courses in sustainability, accounting, and assurance to make the students understand the benefits and the drawbacks, what can backfire in the use of AI when both preparing and producing sustainability report from organization, but also from another third perspective, what they should worry or in a way harness when using AI. And this is explained in the chapter, the relevance to education. So I will pass on to Huwaya that also have some response to that.
Yeah, so in my book chapter, although it's like more focused on the institutionalization process, but there we have that reflection on the interaction between the digital and the sustainability artifacts. So how does this institutionalization process, it goes on in the its processual sense? There is a reflection on that. And for accounting students, it's very important they learn how the tools and the routines in which for which they are being trained to conduct on different organizations, how do they come into their existence in the first essence, and how what are their kind of characteristics and their essence when they come into being. So although the whole chapter might not be that much relevant, some parts of the chapter they give that kind of idea of the foundational things related to the use of the digital tools in the sustainability accounting perspective.
Just if I have time, I can just ask more question about not about the student, about the provisions. Like we, auditor and accountant now, they have a challenge because the use of AI is AI used by two different sides. The company itself, when they create their financial and non-financial information, they use AI, machine learning, and NBL. And editor as well use AI to verify this information. So do you think we need to revisit the professional body code or conduct, like skepticism? Skepticism surely will be different, will shift it from personal to more or less. Because in my class, I have similar topic this semester with FYB, and when a student asked me question I don't know, he told me who is more skeptical, AI agent if he does a job of auditing, or the auditor as a human. So I need you to explore this. Who will be more skeptical, human auditor or AI agent? Thank you.
So, Professor, is this a question, or are you commenting? Because we have, I have a bit of trouble of hearing everything.
Question about the professional conduct of auditor and accountant, how it will be maybe change with more using of AI in verifying non-financial information like ESG's information, where it is difficult to have a clear line for materiality, like financial materiality is clear, but what about materiality in sustainability report?
I understand. This is actually a very important issue, and well, my take on that from our assurance perspective. So this is the chapter on professional skepticism. We are asking also this question: how AI will play in to professional skepticism among auditors. And as you say, will be AI more skeptical or less skeptical? It will be your friend, or will it be a backfire? And we have actually some of, I know about a couple of projects going on that now to investigate this empirically, both with me and with others, among others. So this is a very relevant question, and a lot of researchers are actually now studying this question: how auditors will exercise appropriate level of professional skepticism in settings enhanced by AI. So thank you so much for raising this issue. Thank you.
Thank you.
So please go ahead and raise your, I know that I had some questions from PhD students, so please go ahead, either write it or raise your hand, and please other also, you are welcome with comments and questions.
There are questions, dear Professor Anson. What skills should PhD student and early career researcher develop to conduct impactful research at the intersections of AI, accounting, and sustainability?
So this is a job. Perhaps I will invite other of my colleagues, Russia or Sylvia, if you can perhaps address some of this.
Yeah, so may I
Or
start with?
Huaya? Yeah.
So first of all, the natural language processing part of the AI, it has an immense kind of potential and in the same time implication for the accounting practices. So students or researchers, they need to have that idea of how the data is being processed for data extraction, for understanding of the meanings from the reports, from structured data or from unstructured data, what kind of differences are out there for different tools to be deployed for understanding the structured data and unstructured data and kind of hybrid data. So how can we understand forward-looking statements? How can we understand backward-looking statements? All of these things, they can be like analyzed to different combination of tools, AI tools. And natural language processing is kind of the core of that, which can be complemented by a lot of tools available, and a lot of tools are yet in developmental stages, which are being experimented. For instance, we are experimenting with a tool in the University of Gothenburg here in the Information System Department, where we are up to the extraction of hierarchies of meaning out of unstructured data. So we are working on earning calls transcripts to understand as to how can we understand different connections between the data when different stakeholders are addressing different questions, and when they are raising those questions and when they are responding to those questions, what kind of nuances are attached to those kind of data. So like you have to have combined different kind of topic modeling techniques, embeddings based techniques alongside the knowledge graphs and all those things. So these kind of AI tools, the core natural language processing algorithms, alongside these complementary tools, they are very important for accounting students to understand. There are many other things for management accounting practices in terms of like life cycle assessment tools, which are increasingly embedding AI for their assessment techniques, because previously those were more into the rules-based digital tools, but now they are implying more AI tools into these kind of life cycle assessment and environmental impact assessment tools. So they are very pertinent and important also.
Thank you. Professor Rasha?
Yes. I can perhaps add substance here. For students studying accounting, they can position themselves to work with AI rather than compete against it. They can, for example, use the AI-assisted financial analysis to analyze the financial statements or identify trends and anomalies as me and my colleagues were speaking general financial reports and do a lot of different things. The auditing and fraud detection, they can still use it. In tax accounting too, there are AI tools that can automate the tax calculations, identify deductions, and prepare tax documentations, and they can still need to understand and utilize their expertise to interpret the tax laws, the handle the complex tax situations. Again, the financial consulting and advisory, as routine bookkeeping becomes automated, demand is growing for professionals who can explain the financial insights, advise businesses, and evaluate the investments. So this is one of the highest value future career paths for accounting graduates. And especially with the business analytics and data analytics and all the visualizations, this helps them a lot. The enterprise systems and the AI governance, this again helps them. If we would say do's and don'ts, they can just learn how AI works, verify AI outputs, use AI to improve their productivity. They have to learn and develop some analytical skills, protect their confidential information, and stay updated, and definitely use AI responsibly and ethically. But a very bold and clear advice, especially to students, they should not trust AI blindly. AI can make mistakes. It generates incorrect figures and misinterprets the accounting rules. And especially we've been seeing students treating AI as the authoritative parts, where they sometimes question their younger teaching assistants' data because their AI said differently. So they should not also upload their confidential data. They avoid entering their records, their financial statements. They are jeopardizing their security. Yeah. And definitely they should use it for, they should not rely on it solely, and they don't accept references at all without checking.
Thank you.
Thank
Thank you
you.
very much.
Thank you.
Carmen?
Yeah, I just wanted to add to what Rasha is saying. In the end, very important issue of uploading files on AI platforms, even if they are bought by organizations. Sometime some of this will actually transmit outside of the organization, even though it's bought by the organization for their use. So you need really to scrutinize the level of, in a way, the level how it is kept in the organization. Very, 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 very important. And I know there are accounting firms doing that and really using AI within the boundaries and nothing go out from their accounting firm, but some other organizations are not aware that some of the products they are using, AI products, even though they are buying it for their organization, may be actually leaking some of the information outside and using it anyway. So yes, please be very aware of that.
Professor Paul, you have any comment or question? Yes, please.
Yeah, I can't see how to put the hand up, so I hope you accept. This is just a general comment, which I think is very, very interesting. It comes through this whole the book, of course, and the conversation today. I think the issue of professional skepticism. I work a lot in corporate governance. My focus nowadays is very strongly in corporate governance and stakeholders and creating a culture of ethical culture in organizations. But this idea of professional skepticism is not only for auditors, it's board of directors, directors of organizations. If we look at some of the disasters that have happened lately, and they are members of the board that are not being skeptical, And so that is very important. I think the idea also that comes through is the pull rather than push aspect of approach to reporting. So it's stakeholders pulling, you know. So the idea of triple accounting and being able to, you know, have shared ledgers, all this works together to in the times of AI and abundance of data, as one of you mentioned, we have no lack of data. The only thing we have is a lack of credibility, you know, and all these professional skepticism, pull reporting, triple accounting, all this leads to generating credibility and trust. So that's just a reflection that I was interested. I have to leave now, but I thought I would like to share that with you because I found it very interesting.
Thank you very much.
Thank you, Paul.
Thank you.
Thank you.
Are there another questions or any comment? Another point, with so much AI research began conducting, what makes an AI study a strong contribution to accounting research rather than just a technology applications? In other words, what characteristic distinctions AI research that is likely to be published in leading accounting journals from research that mainly demonstrates technological capability?
So if I should say something about, clearly we had this book is just a start to publish in top accounting journals on AI. You would require that you have a contribution to a theory, and it's not that it's difficult. It's just that AI has gone into the profession for not that long ago. We have been speaking about it for a long time. But we were speaking about AI in 2017, actually, in a presentation with some Big Four, and it was still analytics. So it just in 2023 that we perhaps really begun to use it to some extent in the profession. So I guess that you will see studies and in top accounting journals. It's just a matter of time, but it will always be a question of a contribution to the theory, to not only to with empirical findings. So go ahead, Rasha.
Yeah, I would just say yes, do not treat AI as merely a software tool. Consider how it influences the human judgment, the decision making, the accountability, governance, and professional roles. And this will find the gap that you're seeking to work on, like human AI collaboration in accounting tasks, impact of AI on auditor and accountant judgment, AI governance, ethics, accountability, standardization, and a lot of things that have been mentioned. If we just replay this video, you will come up with a lot of great insights from all speakers. The trust, the transparency, the organization and managerial decision making supported by AI. Just avoid studying AI only as a technical system, or focus on the adoption or the perception, or assuming the AI outputs are objective or error-free, or ignore the ethical or governance implications, because a lot of work are being under investigation lately on this. So if I would give you just a simple rule, see how it affects you or your process or your responsibility or the thing that you're interested in.
Thank you.
Thank you.
Yeah, I just wanted to have my input in terms of the analytics. Uh, like it's not the ordinary analytics. It's kind of different. You have to have that kind of validation things and robustness things out there for the use of those AI tools. So as they are underdeveloped and they are in their own developmental stages, it's quite difficult to justify the use of those methods for a particular purpose. And that challenge, when and where it was overcome, that would be a great contribution for accounting journalism even. So like the special issue which Carmen is leading in the military accountancy research, it would be a great avenue to have those questions in place alongside the other AI assisted things put forward out there. So I think accounting scholarship, they are increasingly recognizing the relevance of these topics and these questions into there, and that kind of restraint which we saw for the past 4 to 5 years from the use of these digital tools, and that the kind of skepticism that was not a professional skepticism, I guess, about these tools, it is slowly and gradually it's mitigating, and things are coming up with great clarity and more robustness and all those things.
Thank you. Are there another questions or point? Another point about dear Carmen, as you prepare the special issue on the artificial intelligence in sustainability accounting and insurance, what types of research contributions would you most like to encourage from future authors?
Well, here I would like Mercedes. Would you like to say a couple of words to that if you are with us yet?
Hello.
Are you here?
Good morning. Yeah, I'm
okay,
here.
thank you. Yeah.
So thank you very much. In that respect, I think that there is a lot of opportunity in terms of research in this area, because all of us we are using these technologies, and I think that we have a lot of doubts about how to do it in accounting, in reporting, in assurance. So welcome case studies and studies related with real practice. Yeah.
So as Mercedes is saying, this a collaborative work with my also our Mercedes who is speaking now, and Sanjaya Kurupu in Australia. So we are the guest editors on this call for papers. And we welcome serious research on this sustainability, artificial intelligence, sustainability, accounting, and assurance. And this, like Mercedes say, encompasses critical review studies, also empirical papers. This could also be either archival, qualitative, or even experimental. So all this type of works on this subject will be very welcomed. Of course, it's a double review process, and it's an ABS journal, so we will be very happy if you submit work related to this subject. It's also, as it stands here, that AI impact could be enhancing the quality, the credibility, and effectiveness of sustainability accounting or assurance. Assurance. Whatever that could research that critically examine and mitigate the unintended consequences that may arise from this from AI in autonomous sustainability accounting and assurance work environment is welcomed. Yeah, so
Thank
so
you.
this is my answer. Yeah.
Thank you very much. Are there other questions? If anyone have any other questions? In the chat, Trina, you have a questions?
Yeah. Okay, thank you for the opportunity. So Dr. Raya actually highlight on his implication that the digitalization implication is the upskilling, but at the same time, Professor Carmen also mentioned the potential risk of professional de-skilling. So would you please elaborate on the extent to which these two outcomes differ?
So I can, so did you say there is two issues, the skilling and Triana? Sorry, I didn't get upskilling
So
and this.
actually, yeah, upskilling and
Upskilling
de-skilling.
and this skilling. Yeah. So you, I think we had one question earlier about the impact of AI in education, and clearly there is an upskilling happening now in both education, where we try to, at least at my university, we try to include topics on AI in accounting education, and of course, firms, accounting firms, are using AI, which in a way influence their training of hires. Now, the de-skilling issue that we also highlighted in the chapter is due to the fact that a lot of tasks could, as a simpler task in accounting, will be executed by AI. That is, you in a way lose a bit of the the manual execution, and some of that may make it more difficult to understand what is happening behind the AI prompts. So this is perhaps the most perhaps easiest example to state here regarding this killing. Now, I don't know how this will play in. So this needs a lot of research, but clearly, if you, Triana, are doing even research and using AI, and you are letting the machine do a lot of things that you have never done yourself, then you can get a very good result and fast and of good quality, but still you don't know how you arrived at this result. So this is a de-skilling perhaps idea behind it, and we don't know what does this mean for the quality of accounting, because it just came now, So this is in a way what we refer to in our chapter. So I think, Huaya, the question was for you too, no? Triana, were you asking also, Huaya?
Yeah, actually, because in his implication, he mentioned about the upskilling.
Yeah, exactly. So the upskilling thing, as Kamin has identified, that it's directly relevant to the education thing, but it's also super relevant to the research thing. If you're not using by yourself these tools, you're going to interact with the other researchers in your field who are like utilizing these tools. And the use of these tools, they are out there anyway. If you are like using it yourself, or it's through interaction from others. So this upskilling, it's like multi-layered. It's not only at one level. You have to execute this upskilling at each and every level, and they are like already out there. You have to respond to it now, and so some things relevant to the human judgment thing, the replacement of the human judgment thing, there needs to be proactively taken up, lest it gives the automation a negative connotation in the research arena, as it had already been misperceived earlier. So I think this upskilling has a lot of dimensions. It has a lot of nuances. It has to be taken up from different perspectives at different levels.
Okay, thank you, Prof. Kamen and Dr. Waya.
Thank you. Other question? Another point. What do you see as the biggest challenge in ensuring the reliability, transparency, and integrity of AI-generated sustainability information?
So perhaps some of other colleagues have a good point. So that Sylvia, could you perhaps share with us your thoughts on that?
Sorry, but I had some problem in connection, so I didn't hear the question.
What do you see as the biggest challenge in ensuring the reliability, transparency, and integrity of AI-generated sustainability information?
So, okay, as a big challenge in assurance, as I presented we presented in the chapter, maybe would be the idea to use this kind of AI, this kind of technologies in order to, in an ethical way, and also considering how this can be a point of change, if I understand the question, a point of change of the auditor action and activities. I think that using AI can be a real instrument to reach a transformation in the assurance profession, but we have to just how can I say, to use this the big problem is the ethical part, and also to avoid some problem of biases, some problem of accountability of the information. So on the one side, can be an instrument to enhance the ability in the assurance profession, but on the other side, we must understand that there are some shadows in the use of AI. So not blindly use it, but decide to use and how to use in an ethical way. I think this is the most important part to understand.
I think also, I see Huaya is, I will let you go ahead, Huaya, but also Toria could say some points on that after Huaya. Yeah, go ahead, Huaya.
So I wanted to reflect on the technical side of it. So it's not like only the ethical and the responsibility side of it, but when we don't know how this information is produced in the first place and how the algorithm works in the first place, we would have issues with the reliability and the validity of this information. So there's a kind of knowledge we need to have before we use those kind of algorithms and those kinds of techniques. So the technical aspects is also pertinent.
Mm-hmm.
Yes, so I can add to that. I think the biggest challenge might be hallucinations from the AI, and this can be mitigated by actually using blockchain and triple entry accounting, so that you know that the data you are being given is actually anchored on a blockchain and signed by a human or a system that you know is reliable. So in that way, I think blockchain, was the first hype in 2017, and now it's AI. But I think they're very complementary in giving that data integrity of what the AI is delivering and using.
Mm-hmm. Thank you. Another point, looking ahead over the next 5 years, which research questions in AI and sustainability accounting do you believe has the greatest potential to shape the future of the field?
So I don't know if Russia is here. Are you here, Russia?
Yeah, sorry, I didn't get this. Can you come again, please?
Yes, looking ahead over the next 5 years, which research questions in the AI and the sustainability accounting do you believe has the greatest potential to shape the futures of the field?
Okay. In terms of high potential research areas, I would say AI for environmental, social, and governance and sustainability reporting, where AI-assisted sustainability report preparation, automated ESG data collection and analysis, AI-generated sustainability disclosures, quality and reliability of AI-generated ESG reports. A research question could be, for example, how does AI affect the quality and credibility of sustainability disclosures? And another point could be the AI and sustainability assurance, where you can investigate whether AI can improve the detection of greenwashing in corporate sustainability reports. Again, on AI governance and sustainability accounting, you can examine who is accountable for sustainability decisions supported by AI. And here you can mention things related to ethical intelligence rather than we understand that the problem is not the availability of artificial intelligence, the problem is the artificial leadership now. So this is really interesting to dig deep into. AI for carbon accounting. How can AI improve the accuracy of organizational carbon accounting? AI in greenwashing detection. Can generative AI identify inconsistencies between sustainability claims and actual performance? Again, stakeholder decision making and AI. AI and citizen science, of course, and sustainability reporting. This area remains relatively underexplored and offers strong novelty. I would highly recommend this topic. And if for a PhD student, I would say AI governance, accountability, and assurance in sustainability reporting is a wide landscape to investigate in.
Thank you. Thank you, Professor Rasha.
Thank you.
We
Thank
should
you.
probably, yeah.
Yeah, thank you very much for your contribution and effort, dear Professor Carmel, Torgan, Hoga, Yara, Sylvia, Professor Rasha, and Professor. Thank you very much for your contribution and your effort, and thank you very much for all joining us today, and thank you very much for taking the time to present it to us today. It's been appreciated.
Thank you so much, all, and have a nice day.
Yeah, and I hope to see you soon in Egypt. You are very, very welcome.
Thank you. Thank you. Thank you.
Yeah.
Thank you.
Bye-bye.
Bye-bye.
Bye. Bye. Likewise, we've got our contacts. Please, if you visit Egypt, feel
Yes.
free to contact us.
Of course. Thank you.
Thank you.